This video is an overview of Aerodrome Finance and the AERO token. Aerodrome is the leading decentralized exchange on Base. Coinbase is Ethereum layer 2. And in today's video, I'm going to show you what Aerodrome is, how to use it. We're going to talk about the risks and opportunities associated with Aerodrome, and then we'll talk about the tokenomics of Aerodrome's AERO token. Welcome back to Dynamo DeFi. My name is Patrick. As a reminder, nothing in this video is financial advice. This is solely intended to be for educational purposes. Now let's get into it. To start, what exactly is Aerodrome? And if you're into crypto, why should you care about it? Aerodrome calls themselves the central trading and liquidity marketplace on Base. Another way to think about them is that they are the leading decentralized exchange on Base. And Base, if you're not familiar, is Coinbase's chain. It's technically an Ethereum layer 2, so it settles onto Ethereum and it uses ETH as gas. However, it functions similarly to another chain. You have to add another chain to your wallet to use it. But why Aerodrome, I think, is interesting right now is it's not just the leading decentralized exchange, but actually the leading DeFi application, period, on Base. And again, Base, Coinbase's chain. So Coinbase is already starting to push a lot of people to Base. They're making it easy to withdraw from Coinbase directly onto the Base network. And they've said that eventually people will be able to buy tokens on Base directly from Coinbase. And Aerodrome is an obvious beneficiary of that as the leading decentralized exchange. To give you a sense of how that's played out so far, since the start of 2024, the amount of deposits in DeFi on Base has grown from around $440 million, 4x to over $1.6 billion. And nearly half of that is on Aerodrome. Aerodrome right now has nearly $800 million in deposits. And if you just look at that since the start of the year, those deposits on Aerodrome have grown from around 120 million to nearly 800 million, currently at 761 million as of the time that I'm making this video. So that's just tremendous growth. And I think it's without a doubt that Aerodrome has been a major beneficiary of Coinbase pushing Base. And the other thing I'll say is that Aerodrome has its token. We'll get to the more details on the token later, but it has its AERO token. And I think because Base doesn't have a token, but people want to speculate on Base growing, naturally a lot of people are going to the largest application and they're saying, okay, this application acts kind of as a proxy for the entire ecosystem. And so that's resulted in a lot of people investing in Aerodrome. Other thing I'll note is that Aerodrome is a decentralized exchange. The volume is very important. The volume peaked back in March, about a month ago at this point. However, it's still much higher than it was prior to starting to run up in February. So recently, Aerodrome has been processing around $20 to $50 million a day in volume. If you go back to February, January, it was processing more like 2 to 5 million a day. So it's still done a 10x in volume even after retracing now. And you can see this if you look at, for example, the weekly or monthly volume charts. It's still up a lot, although it's not quite where it was at its peak in March. And so what exactly sets Aerodrome apart, though, besides the fact that it's the leading decentralized exchange on Coinbase? Well, there's a few things. So Aerodrome is ultimately, it's a fork of Velodrome, which is a leading exchange on Optimism. But ultimately, Velodrome is also a fork of a protocol known as Solidly, which was popular on Phantom back in 2022, with some changes to correct some of Solidly's issues. And these Solidly forks, they're also called V33 dexes. They're distinguished by a few things. So first is they align incentives between token holders and liquidity providers. So they have this methodology here where, as a trader, you pay fees. Those fees go to token holders who are staking their AERO token. And then new AERO emissions go to liquidity providers. And then incentives go to protocols. But the part of this I really want to focus on is that the AERO voters, they vote on which LPs the emissions are going to go to. And then they collect fees from the LPs that they vote for their emissions to go to. And so the result of that is that they're incentivized to provide emissions to liquidity pools that are likely to have the highest fees. And what that results in is less slippage for the pairs that traders ultimately want to trade on. Another thing that sets apart these sorts of V33 DEXs is that pools are divided into stable pools and volatile pools. Stable pools would be something like USDC to USDT or ETH to ST-ETH, some sort of staked ETH. And those stable pools are basically designed to have stability, less price fluctuation as you're trading between those tokens, because they're assumed to have a relatively steady peg, whereas the volatile pools the price will change much easier, as it ought to when you're buying and selling tokens whose prices are in theory unrelated. And so that's what Aerodrome is in a nutshell. And on top of that, the rates are actually extremely good for providing liquidity right now. And a big part of that is because volume has been up, the price of Aero has been way up. And so as you can see here, for example, one of these volatile pools, ETH USDC, ETH absolute blue chip, right? USDC major stablecoin. This pool has a lot of deposits, $152 million of deposits. And yet the APR is still 33.58% on this pool. I mean, that's extremely high, right? If you want to provide liquidity on Aerodrome's AERO token itself, 185%. This pool is a stable pool, so it's DOLA, a smaller, which does mean riskier, but smaller stablecoin, and then USDBC. That is almost 38%. And if you want to try out Aerodrome for yourself, here's how you can do it. First thing you'll need to do is get some funds onto Base. And to do that, you will need a Base compatible wallet, and you'll need to make sure that Base is added to it. MetaMask or other Ethereum compatible wallets will work with Base, and best place to add new chains to your wallet is always going to be chainless.org. That's what I use. You can type in any network that's Ethereum compatible, like Base, and if your wallet's connected, you just click on add to MetaMask, and it's going to add it as a chain. It's really that straightforward. You're not making a transaction or anything. You are literally just adding the chain to your wallet. And once you've done that, you'll have to deposit some funds to Base. And you'll need to make sure you deposit some ETH because you use ETH for transaction fees. But there's a few different places you can do it. If you have money on Coinbase, you can actually withdraw directly from Coinbase to Base. Now, I can't vouch for how that is in every country, but I know that in the United States, at least, that works. And I imagine it does in at least some other countries as well. So you can withdraw directly from Coinbase. Or if you don't have a Coinbase account or you only have money on chain, you can also bridge to Base. And Base has their own bridge at bridge.base.org you can use to deposit. Or you can use something like dBridge. And I've been using dBridge recently because they have an upcoming airdrop. It's already announced. They have a points program. So I figure, why not qualify for the airdrop when I'm bridging to Base? And so, yeah, you can use dBridge to actually bridge there and qualify for the airdrop at once. And that's what I'm doing. And so once you've got some ETH on Base, you are ready to use Aerodrome. First thing you'll want to do is connect your wallet. It may look something like this. I'm going to click on browser wallet. And so my browser wallet is now connected to Base. That's simple. And you can see here that in this particular wallet, I have some ETH, right? So that's what you need, ETH, because ETH is going to be used to pay for transaction fees. And the first thing that you can do is you can swap tokens on Base. So for example, I can swap, let's say 0.02 ETH. I can swap that to USDC. It's going to look something like this. It'll search for a quote. And then once it finds it, you can just click on swap ETH for USDC to actually convert it. And you'll have to confirm the transaction. And just for reference, this particular transaction is costing me about 5 cents. So, pretty low transaction fees. And look at that. It was basically instant, right? This chain is extremely fast. And so then next thing I'm going to do is I'm going to convert some of this ETH to wrapped ETH. Let's do 0.02 again, wrap ETH for WETH. And I'm going to do this so that I can deposit wrapped ETH and USDC into that wrapped ETH USDC pool that we saw a few minutes ago. And once again, that went through. And so now I'm all ready to deposit some liquidity. Going over here to the liquidity section, I see this pool, 33.62%, pretty good rate for what it is. And you can see here that I actually could have kept the original native ETH instead of wrapping it, but it was good for demonstration. And I'm gonna deposit wrapped ETH and USDC. First, you'll have to give permission to use both tokens. And if you've done transactions on chain before, this probably is straightforward to you, right? You've probably done something similar. But if you haven't, then that's why we're doing the tutorial, right? I try to cater to all skill levels on this channel. So we have to allow the transaction again. And now that the contract, I gave it permission in my wallet to basically access my funds, I'm ready to deposit. So I click the big blue deposit button. And I have to confirm the transaction in my wallet. This particular transaction is costing 6 cents. Again, pretty cheap. And note, there's one more step here. You have to make your deposit, and then you also have to press a second button to stake it. And if for some reason your stake button disappears like mine did a second ago, then what you're going to do is you go to the dashboard here at the top, and you see I have my deposited and staked liquidity. Those are two separate things. I have my 0.02 wrapped ETH and my 62.82 USDC, and it's deposited, but it's not staked. So in order to start receiving those rewards, I have to stake it. So I'm going to click this stake button right here. Loading on-chain data. I have to now allow this deposit liquidity pool token, VAMM. V stands for volatile. I'm approving the transaction once more. And then once this is approved, I will have the option to stake it. So I'm going to press that big blue stake button and confirm the transaction. It's a lot of steps, right? It's not necessarily the most user-friendly, I'm not going to lie. That being said, if you are into DeFi, then I think this is a pretty good opportunity, because this is right now one of the, I would say, fastest growing, and honestly one of the largest protocols at this point. It's the largest on Base, and it's relatively large in the scheme of things compared to other protocols, and you can earn 33% on blue chips. So that's not bad. Although understand that any liquidity pool in crypto carries risk. You have risk of impermanent loss. You have smart contract risk. So it's certainly not risk free, but in terms of the tokens themselves, ETH and USDC are relatively low risk as far as crypto goes, but anything in crypto is risky. Now that speech is over, if you want to unstake, you just go to the same thing at the top, dashboard, click the unstake button, and you're just going to undo everything we just did. You could also unstake 50%, but just a demonstration, I'm going to unstake the 50%, and then I'm going to click on withdraw deposit. So again, 2 steps to deposit, 2 steps to withdraw. Allow the transaction, approve, and then I'm going to click on withdraw. And I confirm the transaction again, and then in just a minute, these tokens should appear back in my wallet. Let's go back to the swap section, and we can see I've got the USDC again, and I've got the wrapped ETH. So just like we deposited it, now we were able to withdraw it. Now that we've talked about what Aerodrome is and how to use it, let's dive into the tokenomics for Aerodrome's AERO token. The ticker is AERO, AERO, and as of the time of making this video, the market cap is $617 million with a fully diluted valuation of $1.462 billion. And so that, although the fully diluted valuation is decently larger than the market cap, just over twice as big, a good portion of the tokens are already in circulation, right? We know that Aerodrome is inflationary because that's where the yields on Aerodrome are coming from. However, 42% in circulation for a new token really isn't that bad. So I would say that the tokenomics are not ideal. You do have to worry about more inflation in the future, but it's pretty standard for a new token that's in its first year of existence. As far as the market cap itself, where it stands, it's currently rank 140. And if we look at the decentralized exchange category, how it looks compared to some peers, That places it below Osmosis, the leading decentralized exchange on Cosmos, but ahead of Woo and CurveDAO and Radium, which is the leading decentralized exchange on Solana. And one thing I'll note, like I mentioned before, is I believe that part of the reason why Aerodrome's value, I think, has gone up so much is because of the fact that it's acting almost like a proxy token for the base network, since there's no base token for people to buy themselves. As far as the utility for the Aerodrome token, like I mentioned at the start of the video, you can stake it to earn fees. So if you lock up your Aero for vAero, then you're going to receive fees from people who trade on pools. And then additionally, you can receive incentives from protocols in exchange for voting to send Aero emissions to their pools. So you can stake Aero and you can earn pretty good yield that way. Or of course, you could go to liquidity pools like we talked about before. You could pair it with a stablecoin or with ETH, and you could earn 185% APR, 159% APR, depending on the pool that you're in. So there's also some good opportunities to use Aero in DeFi. And so what about the risks and opportunities associated with Aero? First, we'll talk about the opportunities. I think the main opportunity is that Base could potentially get a lot more users. Just for comparison, if we look at BSC, Binance Smart Chain, Binance's main chain, which they were supporting, similar to how Coinbase is supporting Base, even after several years, I mean, it's really been 3 years since Binance Smart Chain was really having its moment where it was the thing that everyone was talking about. It's still the third largest chain by TVL, ahead of Solana, just behind Tron, which has its own reasons for being that high, and of course behind Ethereum. But if you look at, for example, the incredible run-up in terms of deposits and activity that Binance Smart Chain had back in 2021, then it really went from almost nothing. It went from a few $100 million to over $21 billion at its peak in May of 2021 in a very short time frame. And so when I talk about 3 years, this is the period I'm talking about. And so the upside of Aerodrome is, well, if Coinbase is able to execute something similar with their chain, then Aerodrome is going to benefit enormously. It's going to become a massive protocol with billions of dollars of TVL, probably hundreds of millions, if not billions of dollars of volume on a daily basis. And that is, of course, best case scenario. There's also various interim scenarios where, for example, maybe Coinbase is just able to get Base to match Binance Smart Chain where it is today. But in that case, that's still billions of dollars of more liquidity that's flowing into Base. Another opportunity is that Coinbase themselves have mentioned that people will eventually be able to buy tokens on Base directly from Coinbase. Well, which exchange is that going to go through? If they're buying on-chain tokens, then a lot of those on-chain tokens are currently listed on Aerodrome. So that's going to be a lot more volume that's being pushed to Aerodrome. And as far as the risks of it, I would say one risk, even though the inflation isn't bad for a token that's relatively new, you do still have to look for some inflation on the medium and long term. So I would consider that to be a risk. Another risk is that, let's be honest, the price is up a lot already. It's up from under 10 cents a couple months ago to $1.45 now. So there's a lot of people who are sitting on a lot of money. And if the market really started to turn or cool down, then some of those people might start to cash out. So you have to be mindful of that. The other risk to be aware of is, I said, what if Coinbase executes on Base and it's able to get as big as BSC? That's great. But what if they don't, right? What if Coinbase, for whatever reason, isn't able to execute? Now, I tend to think they're more likely than not to make Base a success, but Coinbase has had products that failed before. There's no guarantee. And so if that happens, then of course, Aerodrome is unlikely to do well, or if Base doesn't do well, right? Right now, Aerodrome's success is very much tied to that of Base. And then the final risk that I'll say is these tokenomics Aerodrome has, they are phenomenal for making price go up when deposits and volume goes up. It can also work in reverse. So any flywheel that works in a positive way can also work in a negative way. And so in the event that fees, volume, TVL starts to really drop, then that's of course going to affect the AERO token negatively. And if you want to learn more about the latest trends, on-chain analysis, and new launches in crypto, be sure to check out my weekly newsletter at dynamodefi.substack.com. And for more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.